This asset class has given a return of 25% in 2025. Everyone is talking about this glittery asset class, which is gold. So, in today's video, we will discuss what's driving the current rally, what are experts' opinions regarding gold prices, what does technical analysis have to say for gold, what is gold silver ratio and what is its significance, and the most important one, is this the right time to buy gold? Before we move on, a very special announcement. Har Ghar Investor goes global. I'm going to have my next event in Dubai on the 4th of May. The seats are limited, only 100 seats. So please don't forget to check out the link in the description box and in the pinned comment and book your seats right away. If you're in Dubai, do that. If you're not in Dubai, what to do? Please share this with your friends and relatives in Dubai so that they can proceed with the booking. But what will they get to learn? Number one, if they are Indians who are residing in Dubai, why should they invest in Indian stock market? Number two, how can they invest in Indian stock markets? I'm going to talk about my Nifty target and very important, some important points about basics of money management. But is it only about education? No. Apart from knowledge, it will be an amazing experience because we are going to have a lot of games, quizzes, and of course, a lot of selfies. So don't forget to register quickly using the link in the pinned comment and in the description box. So see you soon in Dubai. Hey folks, see Rachana Ranade here and I welcome you all to a very important video which is about gold outlook in 2025. Now in today's video we are going to talk about 5 different key pointers. So let's start with the very first one, which is what's driving the gold rally. The very first point is escalating US-China trade tensions. Now if you have recently heard about Chairperson Fed Chair Jerome Powell talk about these tariff wars, he very clearly mentioned that this could slow down the economic growth and also increase the inflation in USA. Now, if this happens, any type of uncertainty, any type of be it an economy related uncertainty or a geopolitical related uncertainty, what investors want is they want to park their money in safe asset classes, which is the safe asset class, which is an undisputed one, that is treated as gold. So you can imagine that be it something like a Russia Ukraine war, which is like an actual war, or be it like a tariff war, which is between US and China, in both situations, they lead to one point, which is uncertainty. And to counter that, people are going to demand gold. And if the demand rises, price is going to rise. That is driving the gold rally. Number one. Number two, weakening US dollar. Now, what is this? I'm sure you have heard about DXY weaken in the last few days or weeks. What happens is that typically countries park their excess money in dollars. Now, if this dollar were to depreciate, obviously a country may not feel that good that their assets are going down. So what a country could do is that rather than parking excess money in gold, in dollars, they may park their money in gold. So this is again increasing the demand, and with increased demand, the prices of gold are further going upwards. One more reason could be central bank purchases. Now, I had given you a passing reference of Russia-Ukraine war, but remember what had happened at that point in time. Russia had a lot of money parked in US dollar reserves, but what USA did, they froze their bank accounts. Now, Russia was like, I am not able to access my own money. And that is the reason why many countries started to buy gold as a currency reserve rather than buying dollar as a currency reserve. So what happens with this is that be it Chinese central banks, be it Russian central banks, be it even India's central bank, which is RBI, we have also started buying more and more of gold. So again, same logic, higher demand will drive up gold prices, and that is again driving the gold rally. Now, is there one more reason why gold is being demanded? And there is one more reason, which is China allowing their insurance companies to buy gold up to 1% of the assets of the insurance companies. So you can imagine whatever AUM the insurance companies have, uska 1% is what they can invest in gold. Now, with this change, this could translate into a potential 200 billion yuan of funds, that is almost $27.4 billion of funds, which could get allocated to gold buying. And again, with this, demand will go up. If demand goes up, prices may go up. So I hope you have understood few top 3 pointers, I can say, which are driving up the gold rally. If you feel that there are few more pointers, please let me know in the comment section why you feel any other reason is driving up the gold prices. Now let's try and understand what are the experts' opinion on gold. See, whenever we call them experts, ideally experts should be talking about only about one direction. If one is saying it will go higher, everyone should say that it will go higher. But then when experts only have contradicting views, what will people like you and me do, right? We'll just understand what everyone has to say. Let's take a look at this. Goldman Sachs had an original target of $3,100 already achieved. Then they increased it to $3,300. By the way, I'm talking about forecast for gold by the end of 2025. Okay, $3,300 per ounce. Okay, this has already been achieved because as I shoot the video, the gold price is around 3,329. Now, Goldman Sachs also mentioned that if this geopolitical uncertainty remains at the same level or even escalates, it could climb up. I mean, gold could climb up to $3,700 per ounce. That's almost 11% potential upside from the current levels. Okay. What about UBS and Bank of America? Both have set a target price of almost $3,500, almost 5% up from the current level. Again, this price target is for end of 2025. Again, they have also mentioned the same point, this tariff uncertainty, geopolitical uncertainty, and being the key drivers, right? Third one, JP Morgan. They have mentioned a 19% downside by the end of 2025. And then we have also one more report from Morgan Stanley, which says their forecast for the end of 2025 is $3,100 per ounce. That's almost a 7% downside from current levels. All these were the Firang opinions. Now let's talk about Desi opinions. Axis Mutual Fund, they have given a gold target of $3,000 per ounce by the end of 2025. Roughly, they are saying actually for the next 12 to 18 months, and that translates into a downside of almost 10%. Motilal Oswal has given a target of around 2,850 to $3,000 per ounce. Again, that is like 10% downside by the end of 2025. So, all in all, a lot of experts, but all have differentiating opinions. So, what we have to try and do is try and do our analysis and take whatever decision you feel is right. There's a very beautiful saying in Marathi, Aikave janache, karave manache. So, listen to all the experts, but ultimately do your own research and take your own decision. Now let's come to a very interesting ratio which is called as gold is to silver ratio. Now what do I mean by this? This is nothing but number of grams of silver I need to exchange to buy 1 gram of gold. Okay, so if I were to just tell you in short, currently 1 gram of gold costs 9,574 rupees. Okay, now till you see the video, I'm sure the price will be different, but as of now, just have a look at this maths. Whereas 1 gram of silver I can buy at around 97.37. So if I were to do a plain mathematics, first one divided by the second one, it comes to 98.33. Now, what do I mean by this? It means that I need to exchange 98.33 grams of silver to buy 1 gram of gold. You'll be like, Rachana, every single time do we have to calculate this ratio? Answer is no. You will directly be able to find this on TradingView. Just search gold spacebar silver ratio, and this is where you will land. So as I shoot the video, currently this is a choice. It has changed. Oh, it is at 99.814. Okay, but I'm sure you might be like, what 99.814 means? Is it on a higher side, is it on a lower side, or how do I mean, what do I take away from this? So if I were to give you some point, that is 99.8 on a higher side or lower side, for that we'll have to check out what has happened in the past. So historically what we've seen, that over a long span of 100 years, this ratio was averaging around 47. What do I mean by this? I need to give 47 grams of silver to buy 1 gram of gold. Okay, in 2023 it hovered around 80 to 90 is to 1, roughly between 80 to 90 is to 1. That was showing strength of gold. Okay, but if you were to understand what was the highest point in recent past, it was during 2020, during the pandemic, where this had shot up to 125 is to 1. Now acha, if you were to even have a look at this, have a look at this. This is 2020, and you can see here this is the highest point. It is 126 to be more precise. And look at what happened after it hit this high of 126. It came crashing down. Now you might be like, oh, in the month of March 2020, gold to silver ratio was high. It means that maybe gold was overvalued, and that is the reason why gold has to come down. No, wait. Whenever I say that gold to silver ratio is high, there could be two possibilities. Gold is overvalued. Possibility number two, silver is undervalued. So there could be two possibilities. If gold is overvalued, gold can come down. Possibility number two, gold will remain at a similar level. Silver is undervalued, and that is why silver will catch up. Okay? Or two possibilities, neither gold is too overvalued but silver is absolutely undervalued. That is why we may see some rally in gold, but a massive rally in silver. Okay, what happened during this space of March 2020 to, let's check this bottom point of August 2020. Let's see. So, see, understand, if it has gone up to 125, some either gold or silver, gold has to come crashing down or silver has to shoot up like anything. Something has to happen. Let's see what has happened. Gold in the same time frame of, where were we, March 2020 here, alt v, to August 2020. Okay, it has not fallen down massively. In fact, it has given a rally of around 25%. But then, in that case, if I'm saying that, okay, gold may also not be that much overvalued, a little bit overvalued, in that case, silver has to be undervalued in that case. So, let us see what has happened for silver. Let us go back to March 2020. This is March 2020, and this is August 2020. How much has the rally been? If I were to check from the bottommost point to the topmost point, this is a rally of 102%. Okay. You might be like, oh my god, Rachna, this was too much of data in the last 4 minutes. Can you summarize this for us? Yes, I will. In simple words, where are we currently? Again, let us go back. We are currently at almost 100 ka gold is to silver ratio. So what do we need to understand from here? A ratio of 100 is not very comfortable. Possibility number one, as I mentioned, gold may see a pullback if gold is overvalued. Possibility number two, gold is that much not that much overvalued. In fact, silver is undervalued. So there is a possibility of a rise in silver prices. That is possibility number two. Possibility number three, gold will see a smaller rally, silver may see a bigger rally. Now, for that, I also need to pull out the silver chart for you. And let us go to the monthly chart. So, let us see what does the monthly chart show me. Now, the chart is a bit clear. Now, if you can see silver, there was this downward sloping trend which has already been broken. There is a retest, and could there be a bounce? If we see a bounce, the bounce can go up to this, which can be up to $50 per ounce. So silver is technically looking very good. What about gold? Let me again clear all the drawings, and let me just switch off the indicators on a monthly chart. How does gold look like? Oh, gold is already way above what it, if I were to just even join this, obviously the cup and handle target has been met, but let me just quickly check this for you one more time. All right. So gold target has already been reached. So if you ask me which one looks more promising pure play from technical perspective, it is silver as compared to gold. Well, I think now let's move on with the $1,000,000 question. Is this the right time to buy gold or not? If you ask me from a short term point of view, as I mentioned, as per technical analysis, there's a great chance that we might see some sort of pullback. Let me repeat, I'm saying a pullback, not a bear phase in gold. Number one. Number two, what about a medium term view? I feel that in the medium term, gold has to go up. Why? As I mentioned, whenever there is any sort of uncertainty, gold is considered as a safe buying haven, and that is why demand shoots up. If demand shoots up, gold prices are going to go up. What sort of uncertainties? Of course, uncertainty about Russia and Ukraine, uncertainty about US and China trade war resolution, and uncertainties because of growing tensions between India and Pakistan. The Pahalgam attack was an attack on every Indian's heart, and I'm sure that some sort of concrete steps will be taken by India, and if that be so, that will increase more uncertainty, and because of this, in the medium term, ideally gold prices should rise. So all in all, I hope you have understood what could be the short term view, what could be a medium term view. But if you feel that you are not the right person who would want to time the market, in such cases, the best way or the simplest way out is to start an SIP in some gold ETF, which will ensure that you enter gold at multiple price points. I hope you have enjoyed this video, and I hope you found an answer to what could happen to gold in 2025 with a lot of perspectives. If you did, don't forget to smash the like button. Don't forget to share this video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye.